and welcome to this edition of Investor Daily's Product Spotlight. I'm your host, Olivia Grace Curran. Today, I'm joined by Alan Pullen from Magellan Investment Partners. Alan is Portfolio Manager for Magellan's Global Opportunities Fund, and we'll be focusing on global equities today. Great to have you with us today, Alan. So please tell us about the fund.
Well, the Global Opportunities Fund is a all-weather portfolio of high-quality companies. So it's about 25 to 30 stocks, global stocks that are very high quality, that have really strong prospects going forward, backed by our in-depth research. And these companies have really strong competitive advantages, which we think places them well for long-term outperformance versus the market. So it's a very long-term portfolio.
One's investment philosophy is critical. Alan, what is unique about the Magellan Global Equities investment philosophy?
I'm really glad you asked that question because I think our philosophy is what really differentiates us from many other market participants. And it's quite unique and quite focused in what we do. And I touched on a couple of elements kind of when I was describing the fund at the high level, but it is worth diving in a little bit more. So I talked about quality. And quality really underpins everything we do here at Magellan. We really cut down the whole investment universe, thousands and tens of thousands of stocks around the world into a couple of hundred really high quality companies that deliver superior long-term compound returns for investors. The second key element of our philosophy, I would say, is intrinsic value discipline. Even the highest quality company can actually be a bad investment if you overpay for it. So we're really disciplined about making a sensible assessment of the intrinsic value of those companies. And we do a lot of work to be able to make that sensible assessment. And I would say the third key element of the investment philosophy worth keeping in mind is we are long-term investors. So a lot of the market, they get obsessed with short-term narratives, what's happening in the news, what Trump is tweeting about. We're focused on where these companies are going to be 3, 5, even 10 years from now, making sure they're going to be bigger, more profitable, more powerful. And that long-term focus really allows that quality to compound over time and the price to move towards intrinsic value. So I'd say those are the three key elements of the philosophy.
So quality is paramount in your investment process. Tell us more about your definition and why it's differentiated.
Yeah, that's a good question because a lot of people say we invest in quality companies, but often that doesn't really mean very much. It's what they like at the time. So we've got a very strict definition, and it really comes down to a company's economic moat, most importantly. And this is, people think about quality in terms of backward-looking, return on equity metrics. This is forward-looking, and that's important. It's about where these companies are going to be in the future. What are the economic forces that protect their profit pool and allow them to grow it over time? So that can be things like economies of scale or network effects. What makes these companies special and is going to allow them to thrive going forward? We also think about kind of other key quality criteria, and we assess these companies in a lot of detail, and it goes through a deep research and investment committee process around things like business risk, agency risk, reinvestment potential as well.
Now, examples are the best way to articulate an important concept. So, Alan, can you talk us through a high-quality stock in your eyes?
Yeah, look, that's right. So maybe let's illustrate this with Microsoft. It is a classic blue chip these days, and it is that blue chip. It's performed strongly for so many years because of that high quality. It's allowed it to compound earnings and returns faster than the market and delivered great returns for investors. And we believe will continue to deliver great returns going forward. Well, why? It has many competitive advantages. So think about the economies of scale that you get from that company. They are one of the world's, largest companies. Its software, economies of scale are so important. Of course, they're key enterprise software that we use every day. And you build that once and then you sell it all over the world. So it's very, very hard for competitors to build a competitive product because Microsoft can invest so much in that product. It also has network effects. If everybody in the office and other offices are using Excel, for example, that makes it more beneficial for everybody else because they can share those skills, they can share files and so on. And things like economies of scope is important because they're so broad. They have connections with all major enterprises around the world, typically. It means when those enterprises need new services like security software, like AI, like the hyperscale cloud, public cloud, Microsoft is a natural partner for those enterprises already. So that allows them to grow into those new areas as well. So it's a very high quality company, very well managed, really strong growth prospects still when we think about the growth in the cloud and Azure, which is being driven by AI as well. And it's also trading an attractive forward valuation. So it really ticks all the boxes from a quality perspective.
And so, Alan, how do you take the analysis and research from your investment team and then construct the portfolio?
Yeah, it's a good question. We really focus the portfolio construction process on having a balanced portfolio. That's between more return-seeking stocks and more defensive stocks, so we can perform in both up markets and down markets. And we're really trying to maximize that combination of quality. We make that explicit assessment of quality of each our companies, the intrinsic value support that they have, and the risk that they bring to the portfolio. So that's idiosyncratic risk, is that stock exposed to tariffs or whatever is happening of the day, and risk that accumulates across a number of positions. So it's really that quality, intrinsic value, and risk that determine the individual position sizes of the companies within the portfolio.
Now, the fund has outperformed the index since inception. Can you talk us through some of the key contributors?
Yeah, so it's been a pleasing performance to date, coming up to 4 years. So it's been a very strong start for the portfolio. It's had a wide range of contributors, which has been nice. It's not overly exposed to any one stock or any one sector. So, there's no NVIDIA been driving performance here, for example. We have got good performance from some of our tech stocks. So I talked about Microsoft. That's been a solid performer. Things like Amazon and Netflix, also very good over that period. But what is very nice is we've had a lot of other sectors and stocks contributing as well. So just last year, Lloyd's Banking Group delivered really strong returns for the portfolio, which is a very different stock to those. Another example out of Europe, Reckitt, consumer defensives, have not been kind of very well regarded by the market. It's been a bit more speculative driven over the last year or two, but this bottom-up research identified that it was highly mispriced and it delivered actually really strong returns for the fund as well. So it's been a lot of different contributors, which has been nice.
And it's earnings season in the US at the moment. What are some of those things that you look out for, particularly in some of the companies that you just mentioned?
Look, we're always looking for kind of updates on that long-term thesis. So a lot of people look at earnings season, they're looking for a beat or for a miss. What we're really looking for is the strategy of that company and the update consistent with our long-term view of where we think that company is going? So for a company like Microsoft, for example, yes, we'll be looking at the growth of Azure, their hyperscale cloud platform, which is driven by AI, but also the growth of their security software and other parts of that business. And for Adidas, for example, a more recent addition to the portfolio, we'll be looking at how they're reacting to tariffs and any risks that might be coming there, but also, is the long-term brand health intact? So it's really, is that long-term investment thesis intact and being worked on by that company management?
And how challenging is it to keep on top of geopolitics and everything else that are affecting equities at the moment?
Yeah, look, there's a lot happening in the world, let's be honest. It started with a bang this year for sure in terms of what's happening in the US out of there. We think we need to be aware of this and pre-prepared for it. So we do have, a large analyst team that allows us to keep on top of both the individual stocks, and also we've got, a macro team who are looking at those top-down and geopolitical issues. We have consultants across the world, including in Washington, D.C., who can consult about that as well. So that allows us to keep on top of those macro and geopolitical risks and decide, do we need to kind of tilt the portfolio away from areas of emerging risk to help protect the downside? Because it is supposed to be a portfolio that performs in both up markets and down markets.
And which type of investors is the Global Opportunities Fund suitable for? And how do you recommend incorporating them in a portfolio?
So can I say all investors? No, I do think this is a very broad portfolio in terms of its applicability. Quality companies, they've been proven to deliver superior risk-adjusted returns for clients over the long term. Now, that's based on both our internal work and our internal universe, but you can look at simplistic measures of quality like the MSCI Qual. It still outperforms over the long term. So I think it should be a cornerstone for most investors in that they deliver superior risk-adjusted long-term returns. It's not going to deliver, plus 30 or 40% in any one year. It's really there for that long-term compounding growth. So if you're a long-term investor looking to build wealth over time in high-quality companies with manageable risks given the quality of those companies, this is a portfolio you should be considering.
And companies such as SpaceX that are looking to potentially IPO soon, how closely do you keep an eye on those companies, and what makes a decision to invest in them?
Well, we'll put them through our process. So if they are coming to market to an IPO, we'll do that in-depth assessment on the quality of those companies. Do they have competitive advantages? How sustainable are those competitive advantages? We're looking at OpenAI very closely at the moment. Of course, that's a very big private company that might come to market, or Anthropic, because they also might impact existing positions within the portfolio. So we're doing a lot of work around those companies. How might they affect Google Search, for example, OpenAI? So we're familiar with them already, but we will put them through that quality process. Do they have sustainable competitive advantages over time? What is their intrinsic value, support, and make a decision once they come to market.
And Alan, how can investors gain exposure to Magellan's Global Opportunities Fund?
Well, you can speak to your advisor, and it's available on many platforms. It's also available direct through Magellan for an unlisted vehicle, and it's listed on the ASX under the code OPPT.
That's all we have time for today on Investor Daily's Product Spotlight. A big thanks to my guest, Alan Pullen, Portfolio Manager at Magellan Investment Partners. We'll see you next time.